You know, it's funny, when you think back to the dot-com boom, it's almost wild, right? Like, people were just seeing their stock options turning into these insane fortunes, like, almost
Yeah,
overnight.
it was a crazy time for sure.
It felt like almost unreal, you know? And
A real gold rush mentality.
exactly, exactly. And you know what's really interesting is that that same energy, that feeling that something massive is happening and you could be a part of it, it's like it's happening all over again, but with crypto.
Absolutely. It's a really great comparison. We're seeing that kind of rapid wealth creation happening right now in the digital asset space, and it definitely has a lot of parallels to those earlier tech booms in terms of like just how fast things can change and how quickly opportunities can pop up.
So that's exactly what we're diving into today. The big question, could you become a Bitcoin millionaire?
$1 million question, literally.
Exactly. And to help us navigate this whole thing, we're going to be looking at this article from Crypto News. It's called How to Become a Bitcoin Millionaire: 5 Key Guidelines.
Oh yeah, I read that one. It's a good one.
So our mission basically is to break down these core strategies and the historical context that the article uses so you can really understand, the potential paths to getting some serious returns from Bitcoin.
And I think right off the bat, it's worth highlighting just how quickly wealth has been generated in this space.
Yeah.
The article makes a comparison to Amazon stock, which is a pretty well-known success story, right?
Hmm?
They point out that Amazon stock gave investors a 100x return.
100 times.
Yeah, 100-fold return, but in 18 years. So like if you had put $2.24 into Amazon back in April 2007,
Wow, 2007.
yeah, it would have been worth, get this, $242 by February of this year. So that's remarkable growth, don't get me wrong.
But 18 years is a long time.
It is, it is. And that's what's so fascinating when you compare that to Bitcoin, which achieved that same 100x growth.
Wait, seriously?
Yeah, in just 8 years.
No way.
It went from about $1,000 in February 2017 to a whopping $100,000 by February 2025. That's more than twice as fast as Amazon.
So like twice the speed, same returns. That's insane.
Exactly. And what's so crazy to think about is that this crazy price increase has literally created a ton of new millionaires.
Like actual Bitcoin millionaires.
Yep. The 2024 Crypto Wealth Report by Henley and Partners, they estimated that as of August of last year, there were over 172,000 crypto millionaires globally.
That's a wild number.
It is. And get this, a huge chunk of them, like a big portion of those millionaires, are Bitcoin millionaires. The report said there were 85,400 people with $1 million or more, mostly in Bitcoin.
So basically like almost half, right?
Pretty much. And the thing is, these numbers aren't just sitting there, they're growing like crazy. The report showed that in just 1 year, the number of crypto millionaires increased by 95%, and Bitcoin millionaires jumped up by 111%.
So it's like it's still happening.
It's happening right now, yeah.
Yeah.
Which brings us to a really key point the article makes. It's not too late to get in on this.
You're saying there's still a chance?
Potentially, yeah.
Oh.
There are people who believe that despite the massive gains we've already seen, there's still a lot of room for growth in crypto, especially with Bitcoin.
So you're telling me I could still become a Bitcoin millionaire?
I'm not saying that, but I mean, the potential is definitely there. The article lays out these 5 guidelines, these key things to understand if you're serious about, trying to achieve that goal.
All right, so let's jump into those. The first one they talk about is this thing called Bitcoin's 4-year price cycle.
Okay, so this is really important to get your head around. The core idea is this thing called the Bitcoin halving event.
Halving event.
Basically, Bitcoin, since it started, way back on January 3rd, 2009, has had this built-in mechanism where every 4 years, approximately, the reward for mining new blocks of Bitcoin gets cut in half.
So less Bitcoin is being created.
Exactly. The rate at which new Bitcoin enters circulation gets directly reduced. And this most recent halving just happened relatively recently on April 20th of 2024.
Okay, so what does that mean for the supply? Like how much new Bitcoin is coming out now?
So after this last halving, miners get about 3.25 Bitcoin for each new block they mine. And a new block is mined roughly every 10 minutes. So that translates to roughly 450 new Bitcoin entering circulation every single day.
So every day, 450 new Bitcoin. I mean, that's still a lot of Bitcoin, right?
It is, but the key is that it's less than before. And this decreasing rate of new Bitcoin being created, that's like a core part of how Bitcoin is designed.
I see, I see. The article makes this really interesting comparison to traditional finance. They say it's kind of like when the Federal Reserve raises interest rates.
Right, right. Basically, when the Fed raises interest rates, one of the things they're trying to do is reduce the amount of new dollars that are flowing into the economy. And what that does is it increases the purchasing power of the dollars that are already out there.
Okay, so I'm following. So how does that relate to Bitcoin?
Well, in a similar way, when the Bitcoin network has this halving event, it's constricting the flow of new Bitcoin, right?
Hmm.
So theoretically, each Bitcoin that's already out there becomes more scarce, more valuable, as long as people still want it, of course. If the demand for Bitcoin stays the same or goes up, then in theory, the price should go up too.
Hmm, that makes sense. So you're saying it's like basic supply and demand?
Yeah, on a very simplified level. But, what's interesting to think about is this isn't exactly like apples or oranges. It's a digital asset. There's this whole psychological element to it. Network effects, how people feel about Bitcoin. That plays a huge role too. It's not just about scarcity.
Right, right. So it's more complex than just, less supply equals higher price.
Exactly. But historically, that halving event, that contraction of the supply, has been a big factor in Bitcoin's price increases. And that leads to their point about dollar cost averaging as a potential strategy.
Dollar cost average, what's that? Like, break it down for me.
It's pretty straightforward, actually. Basically, you decide on a fixed amount of money that you're going to invest, and you invest it at regular intervals, like every week or every month, no matter what the price of Bitcoin is at that moment. And the article is saying that historically, if you had done this consistently, even with a fairly small amount of money each week, you could have made significant returns, especially over these 4-year cycles.
Okay, I'm kind of getting it. But do they give an example? Like, how much money are we talking about here?
They do. They say that if you had invested $192 every week for just 1 year,
$192 a week.
yeah, it could have potentially turned into $1 million in under 8 years, based on how Bitcoin has performed in past cycles.
Wow, $1 million from $192 a week. That's pretty mind-blowing.
It is, right. And they even make it even more relatable, kind of help people understand what that means in practical terms. They point out that the average monthly car payment in 2025 for a new car, it's about $724.
Oh, wow, that's a lot.
It is. So their point is, if you could save that money, if you drove an older car and put that $724 into Bitcoin each month instead of into a car payment.
You're saying, historically, I could have been a millionaire by now.
Based on past performance, yes.
It's a pretty powerful thought, right? It makes it feel a lot more achievable when you think about it in terms of something like a car payment.
It does. It does. Okay, so that's the first guideline, this whole 4-year cycle thing and dollar cost averaging. What's the second one they talk about?
So the second one is all about the wild price swings you see in crypto, the volatility. How the price can go up and down like crazy every day, every week, even every month.
Oh, yeah. You definitely see that.
Right. And the article acknowledges that, dollar cost averaging can be a good strategy, but it can take time. And they say there are ways to potentially get those big gains faster, but it comes with a lot more risk.
So you're saying there are ways to, play the market and try to time it right.
Exactly. They talk about swing trading and day trading. I've heard those terms thrown around, but I'm not really sure what they mean.
So day trading is basically making a ton of trades throughout the day, trying to make money off those small, short-term price changes. It's very active. Swing trading is a bit more like you hold on to your assets for a bit longer, maybe a few days, a few weeks, and you're trying to catch those bigger price swings.
I see, I see. So it's all about buying low and selling high, right?
Yeah, that old chestnut. The article actually quotes Benjamin Franklin here. He said, "Early to bed and early to rise keeps one healthy, wealthy, and wise."
So they're saying wake up early, pay attention to the market, buy when it's low, sell when it's high.
Basically. But anyone who's tried to actually do that consistently knows it's way harder than it sounds.
You're telling me, so is that even possible? Can people actually successfully time the market like that?
Well, the article gives an example of someone who seems to have pulled it off. They talk about Peter Thiel's Founders Fund.
Peter Thiel, the PayPal guy.
That's the one. So apparently back in March 2022, Founders Fund sold off all of its Bitcoin.
All of it.
Yeah, and it was right before the market took a pretty big dip. So they made a huge profit, something like $1.8 billion. And then later, as prices started to recover, they started buying Bitcoin and Ethereum again.
Wow. So they basically saw the crash coming and got out just in time.
It seems that way. Of course, they're a sophisticated investment firm with a lot of resources, so it's not exactly something the average person can just replicate.
Right, right. So that's swing trading, day trading, trying to time the market. What else does the article say about Bitcoin's price movements?
They also break down this typical pattern that they say happens within each of those 4-year Bitcoin cycles, those cycles we talked about earlier that are tied to the halving events.
Oh, so what's the pattern?
They say that historically, you see about 2.5 years of really strong upward price movement, like a rally. And then you get about a year and a half of correction.
Correction, so like the price goes down.
Yeah, it could be a sharp drop, or it could be more gradual, like a sideways movement where it's not really going up or down much. So their point is, if you really do your research, if you follow the news and start to understand these patterns, you might be able to, buy when the market is down and sell when it's on the upswing. But it's definitely a lot more work and a lot riskier than just dollar cost averaging.
Right, right. So you got to be paying attention. Okay, so we've covered the 4-year cycle, dollar cost averaging, swing trading, day trading. What's the third guideline?
So the third one moves away from Bitcoin specifically and starts talking about altcoins.
Altcoins.
Yeah, so for anyone who's maybe not super familiar with all the crypto lingo, altcoins are basically any cryptocurrency that came after Bitcoin. They were inspired by Bitcoin. They use similar blockchain technology, but they're not Bitcoin. There are literally thousands of them out there now.
Thousands. Wow, I had no idea.
It's a whole world out there. And the article points out that a lot of these old coins, they've also produced some really big returns for investors. Like some of them have even outperformed Bitcoin.
Mm.
And that's allowed some people to, start with a relatively small investment in one of these altcoins and end up with a lot of Bitcoin.
So you're saying you could become a Bitcoin millionaire by investing in something that's not Bitcoin?
Potentially, yeah. But there's a big but here. The article is really strong on this point. You have to be so careful about scams.
Scams?
Yeah, there are a lot of shady projects out there in the crypto world, unfortunately. So they really emphasize the need to do your research, what they call fundamental analysis, before you put any of your money into an altcoin.
Fundamental analysis. So like, what do you mean by that?
Basically, it means looking at the project itself, going beyond the hype. You have to understand what problem they're trying to solve, what makes them unique, what are their advantages compared to other similar projects. You have to look at the team behind it, their experience, their track record. You want to see if there's real-world use for their technology, if people are actually using it. It's about trying to figure out if the project has genuine potential or if it's just, hot air.
So it's like due diligence, basically.
Exactly. Don't just jump into something because you saw it on Twitter or because someone promised you it's the next big thing. Do your homework, understand the fundamentals of the project, and be wary of anything that sounds too good to be true.
That's good advice for pretty much anything, I think.
Hmm.
Okay, so that's altcoins and fundamental analysis. What's the next guideline?
This one's a bit more practical. It's about taxes, specifically IRS taxes and crypto Roth IRAs.
Taxes. Ugh, not my favorite topic.
I hear you, but it's an important one. There's that famous quote by Ralph Waldo Emerson, money often costs too much. And when it comes to investing, part of that cost is definitely taxes.
So what are they saying about taxes in crypto?
Well, they point out that there might be ways to, reduce the amount of taxes you have to pay on your crypto gains. They specifically talk about self-directed IRAs.
IRAs, those are for retirement, right?
Yeah, but there are different types. With a self-directed IRA, you get more flexibility in terms of what you can invest in compared to a traditional IRA. And that can include cryptocurrencies like Bitcoin and XRP.
So you can put Bitcoin in your retirement account.
Yeah, that's the idea. And the article mentions that the yearly contribution limit is $7,000, although they do say that you should always check with the IRS or a financial advisor because those limits can change.
Right, right. Always good to double check. So what's the advantage of using an IRA for crypto? Like, how does that save you money on taxes?
Well, with the traditional IRA, the money you put in is tax deductible. So that means it reduces your taxable income for the year, which can lower your overall tax bill. And then any profits you make within the IRA, those are tax deferred, meaning you don't have to pay taxes on them until you retire and start taking the money out.
Okay, so you save money now and you save money later.
Potentially, yes. And there are also Roth IRA options where, the contributions aren't tax deductible, but the withdrawals in retirement are tax-free if you meet certain conditions. So it's definitely something to think about, how these different IRA options can fit into your overall investment strategy.
It sounds like it could be worth it to talk to a financial advisor about that.
For sure. It's always good to get professional advice, especially when it comes to something as complex as taxes.
All right, so we've covered 4 guidelines now. The 4-year cycle, volatility and trading strategies, altcoins and taxes. What's the last one they talk about?
The last one is all about security. They call it hacks, scams, and crashes.
Ooh, that sounds scary.
Well, it is a real concern in the crypto world. There are definitely risks involved. So their main piece of advice is to really prioritize security and to only use reputable cryptocurrency exchanges and custodians.
Exchanges and custodians? Like, what are those?
So exchanges are basically platforms where you can buy and sell crypto. And custodians are companies that store your crypto for you,
Hmm.
kind of like a bank, but for digital assets. And the article is saying stick to the well-known regulated ones, the ones that have a good track record of security.
So, like, don't just go for the first one that pops up on Google.
Exactly. And they're especially cautious about investing in projects that you don't really know much about, especially if they ask you to connect your Web3 wallet. That's a digital wallet that lets you interact with applications on the blockchain. And they say, be super careful about giving your credit card details to any platform without really doing your research first.
So it's all about being careful, doing your research, not rushing into anything.
Exactly. It's like anything else. You have to be smart about it. And they also mentioned that if you're holding a lot of crypto, it might be a good idea to look into securing your own crypto wallets so you have direct control over your assets.
Like not relying on a third party to keep your crypto safe.
Exactly. So basically, be smart, be cautious, and don't let the fear of missing out make you do something risky.
Okay, I think I can handle that. So we've talked about the 5 guidelines, but the article also shares some stories of people who have actually become Bitcoin millionaires, right? Like real life examples.
Yeah, they do. And I think those stories can be really inspiring. They show that it's actually possible.
Totally. So who are some of these Bitcoin millionaires?
Well, they start with Eric Finman. His story's pretty incredible. He became a Bitcoin millionaire when he was a teenager.
What? Seriously? A teenager?
Yeah, he invested $1,000 in Bitcoin back in 2011 when he was only 12 years old.
2011, that was like the early days, right?
Yeah, definitely. And by the time he was 25, he had dropped out of school, sold a startup he created, made his first million from Bitcoin, and even launched a satellite. It's a pretty amazing story.
It is. It's like a real life crypto prodigy.
Right. It shows that being early to the game can really pay off. Then there's Heather Delaney. She's a business professional from the UK. Her story is a bit different. She wasn't an early adopter or anything. She just focused on saving and buying Bitcoin consistently over several years. And eventually, by 2021, her Bitcoin was worth over $1 million.
So slow and steady wins the race, basically.
Yeah, it shows that you don't have to be a tech whiz or anything. You can just be disciplined and patient. And then, of course, there's the story of Tommy and James, the brothers from New York who made millions from Shiba Inu, that meme coin.
Oh, yeah, I remember hearing about them. That was crazy, right? They turned like a few $1,000s into millions.
Yeah, they invested $8,000 during the pandemic, and within a few months, they were multimillionaires. And the article even mentions that some people think Shiba Inu could go on another big run, so they might make even more.
That's insane. It's like winning the lottery.
In a way, yeah, but it's also super risky. That's the thing about those meme coins. They can go up like crazy, but they can also crash just as fast. You got to have a high-risk tolerance to play that game.
Right, right. Okay, so we've talked about the 5 guidelines, the stories of people who've made it, and now there's this thing they call a pro tip, which is be a crypto billionaire.
Uh-huh. Yeah, they're definitely having a little fun with that one.
So what do they mean by that? Like be a billionaire first, and then it's easy to become a millionaire?
Basically, yeah. They're being tongue-in-cheek, pointing out that if you're already a billionaire, becoming a millionaire is, not that big of a deal.
Hmm.
They even give this funny piece of advice to any billionaires who might be reading, though they admit it's unlikely.
What do they say?
They say, invest in the latest meme coin with the best marketing and anonymous creators. Haha. It's obviously sarcastic. They're kind of poking fun at those super risky investments.
Yeah, I get it. Okay, so we've covered a lot of ground here. Maybe we should do a quick recap of those 5 key guidelines just to bring it all together.
Yeah, good idea. So the first one is understanding that 4-year Bitcoin price cycle, how those halving events can drive up the price. Second is all about the volatility, those price swings, and deciding whether you want to try to time the market or take a more passive approach like dollar cost averaging. Third is exploring altcoins, but always doing your research, understanding the fundamentals of the project before you invest. Fourth is thinking about taxes, maybe talking to a financial advisor about using something like a self-directed crypto Roth IRA to potentially reduce your tax burden. And fifth, and this one is super important, prioritize security. Use reputable exchanges and custodians. Keep your crypto safe.
It's a lot to take in, but it sounds like there are definitely opportunities out there, right?
I think so, yeah. And the stories of those Bitcoin millionaires, they show that it's not just a fantasy. It's something that people are actually doing, and they're doing it in different ways.
So it's possible, but it takes work, it takes research, and it takes being smart about it.
Exactly. It's not a get-rich-quick scheme. It's an investment. And like any investment, there are risks involved. But if you do your homework, if you understand the market and you're careful, it could potentially pay off big time.
So for anyone listening who's thinking, hey, maybe I could be a Bitcoin millionaire, what would you say to them? Like, what should they do next?
I'd say, first of all, don't just take our word for it. Go and do your own research, read the article we talked about, learn as much as you can about Bitcoin and the crypto market in general. Think about your own risk tolerance, how much risk are you comfortable with, and then consider your financial situation. How much money can you realistically invest? And finally, don't be afraid to reach out to a financial advisor, get some professional guidance. This is a complex world, and it's always good to have someone in your corner who understands it.
That's great advice. I think it all comes down to, be informed, be smart, and be careful out there. There's definitely potential in the crypto world, but you got to navigate it wisely.
Couldn't have said it better myself.
Well, that's all the time we have for today. Thanks for joining us on the deep dive. And until next time, keep exploring, keep learning, and who knows, maybe you'll be the next Bitcoin millionaire.
See you next time.
Bye.